As of 2026, property values have climbed in most parts of the country for several years running, which means property tax bills have climbed right along with them. And there are 8 real legally established categories of property tax relief specifically for seniors that a large share of eligible homeowners have simply never applied for. Not a rumor, not a nationwide automatic exemption. Real programs run by your state or county, sitting there unclaimed because nobody sends you a notice saying you qualify. Here's what this video covers. All 8 categories of senior property tax relief, who typically qualifies for each one, the real dollar impact, and exactly how to find and apply for the ones available where you live. Stay to the end. The last 2 are the ones almost nobody checks because they sound like they're only for a narrow group, when in practice they reach further than most people assume. Before we go further, this is exactly the kind of thing that never gets explained clearly in one place, because every state runs its own version with its own name, its own paperwork, and its own deadline. That's the only job this channel does. Plain English, no persona, no upsell. If that's useful, subscribe and turn on the bell so you catch the next one. Free, always. Here's why this matters more now than it used to. Home values have risen substantially in many counties over the past several years, and property tax bills are typically based on assessed value, so as values go up, bills go up right along with them, even if your income hasn't moved an inch. States and counties created these senior relief programs precisely because rising valuations were pushing longtime homeowners, especially retirees on fixed incomes, out of homes they'd paid off decades ago. The problem is that almost none of these programs apply automatically. You have to know your program exists, and you have to file the paperwork, often every single year. If you're thinking, this isn't me, my house isn't worth that much, several of these programs are based on age and residency, not property value. So a modest home can qualify just as easily as an expensive one. And if you're thinking, I make too much for anything like this, that assumption is exactly the one costing people the most, because several of these categories have income limits far higher than people assume, and a few aren't income tested at all. Here's the part that should make you a little annoyed, in a useful way. These programs exist in writing, funded, and legal in nearly every state in some form, and the reason so many seniors never use them isn't that they don't qualify. It's that no county assessor's office is required to call you up and tell you a program exists. Understanding that should be enough to get you checking your own county's website today, instead of assuming you'd have been told already. Start with reductions based on your home's assessed value. The first is the senior or elderly homestead exemption, an additional exemption on top of the standard homestead exemption most homeowners already get, specifically for owners past a certain age, often 65. This affects the retiree in a modest starter home just as much as one in a larger paid-off house, since the exemption typically applies as a flat reduction to your taxable value rather than a percentage. The second is the senior assessment freeze, sometimes called a senior freeze, which locks your home's assessed value in place once you qualify, so future increases in market value don't raise your tax bill even while your neighbor's bills climb. The catch on both: you typically have to file an application with your county assessor by a specific date each year, and missing that window can mean waiting until the next cycle. The action right now: search your county assessor's website for senior exemption or senior freeze, or call their office directly and ask what senior-specific property tax programs they administer. Next, relief tied to your income rather than your home's value. The third is a circuit breaker program, a state tax credit or refund calculated when your property tax bill exceeds a certain percentage of your income, common in states that want to prevent property tax from consuming too much of a fixed retirement income. The fourth is a full property tax waiver for very low-income seniors, which a smaller number of states and counties offer to homeowners below a specific income threshold, sometimes eliminating the bill entirely rather than just reducing it. This reaches both the retiree living on Social Security alone and, in circuit breaker states, retirees with modest pensions on top of it. Eligibility here runs on the ratio between your income and your tax bill, not a single income cutoff. The catch: circuit breaker credits are usually claimed on your state income tax return, not through your property tax bill directly. So people who don't think they need to file a state return often skip the form that would have gotten them the credit. The action right now, check your State Department of Revenue's website for circuit breaker or property tax credit for seniors and file the relevant state form even if your income is otherwise too low to require filing. Third, relief that changes when and how you pay rather than how much you owe. The fifth is a property tax deferral program, letting qualifying seniors postpone paying some or all of their property tax until the home is sold or the owner passes away, with the deferred amount becoming a lien against the property rather than a bill due today. The sixth is a local installment or hardship payment plan, which some counties offer to let seniors spread a tax bill across several payments instead of one lump sum, avoiding penalties for late payment. This affects the retiree who's house rich but cash poor, someone whose home has appreciated significantly but whose monthly income is tight, as much as anyone genuinely behind on a bill. The catch: a deferral reduces your estate's equity over time since it accrues as a lien, so it's worth understanding before you use it, even though it solves an immediate cash flow problem. The action right now: ask your county treasurer's office directly whether they offer a senior tax deferral or hardship payment plan, and ask for the specific application form. Finally, relief tied to a specific status rather than age alone. The seventh is a disabled veteran property tax exemption. Many states offer partial or full property tax exemptions for veterans with a service-connected disability rating, and in a number of states, this extends to a surviving spouse who hasn't remarried. The eighth is a disability-based exemption separate from age, available to homeowners who are permanently and totally disabled, regardless of whether they've reached typical retirement age, which matters for near retirees who became disabled before 65. The catch on both: these require documentation, a VA disability rating letter, or a formal disability determination that many eligible people never think to submit alongside their basic homestead paperwork. The action right now: contact your county Veterans Service Office if you're a veteran or surviving spouse, and ask your county assessor specifically about a disability exemption separate from any senior exemption you've already claimed. Before this week is over, do 3 things. 1. Call your county assessor's office and ask directly, what property tax exemptions or relief programs do you offer specifically for seniors, veterans, or people with disabilities? 2. Check your State Department of Revenue's website for a circuit breaker credit and file the form even if you don't otherwise need to file a state return. 3. If you're behind or struggling to keep up, ask your county treasurer about a deferral or hardship payment plan before a bill goes to collections. 3 steps, well under an hour combined, potentially hundreds or thousands of dollars a year depending on your state and situation. Here's what's worth remembering. Every one of these 8 programs exists in writing, funded, and legal, in some form in most states, but none of them are going to reach out and offer themselves to you. Rising home values and tax bills happen automatically. Getting the relief that offsets them is entirely on you. That's not an exaggeration. That's just how these programs work. Passive on the government's end, active on yours. If you know someone over 60 who's watched their property tax bill climb every year and never checked what relief they might qualify for, send them this video. You could be the reason they finally claim something they were always entitled to. That's what this channel is here to do. In the next video, I'll walk through exactly how to appeal your home's assessed value if you think your county has it wrong, a separate process from these exemptions that can lower your bill even further. I'll see you there.